Fahad Siddiqi here. I want to thank you guys for joining in today. We have a new podcast session here, and I'm super, super excited to have our guest with us here, a young student from the University of Illinois, Ayaan Siddiqui. I already like you because you have a great last name. We're almost brothers, so that's great. Thank you for coming on today, and I'm really excited because Ayaan here, while still being in college, is breaking ground with real estate and technology. Today, we're going to be talking about maybe a buzzword that you guys may or may not have heard around, which is called tokenization. All right. And the reason that I wanted to have this call and record it and share it with you all is because I myself am learning. Tokenization is something that I think people hear about, they may not understand it. Anything that deals with, cryptocurrency, blockchain, uh, all that type of stuff, wallets, um, it kind of goes over people's head, their eyes glaze over, and then they automatically they say scam or don't want to do it, right? But the truth of the matter is that that is the future. That is where we're going. And it's really the young, innovative entrepreneurs like Aon here who are being brave and bold to take that step to integrate new technology into traditional industries like us here in real estate. So, Aon, welcome. Thank you for taking the time. Um, you're taking the time out of your studies. And tell us a little bit about your majoring in bioengineering right now. So bioengineering, tech startup, how did that happen? Like walk us through it.
For sure, yeah. So I guess nowadays, if you do an engineering major, you're not, the path is not necessarily going to lead to an engineering job. That's the case with most of my peers as well. And so I guess I can just start with how I got interested in real estate while being a bioengineering major. So as a college student, you're always looking for cash as well as those long-term opportunities to potentially, buy like an M5 or something like that. So I what I did was I tried to look into ways to invest in real estate, and unfortunately, breaking into real estate is extremely hard, especially with the really great deals, right? And so a lot of the platforms I looked at didn't have liquidity, which was a big factor for me. Just because as a college student, as well as even if you're like not an accredited investor, liquidity is extremely important. And so I looked for ways to invest in real estate. Unfortunately, I couldn't find any. So I thought about, why not create a real estate stock market, right? And so over time, that idea developed into a secondary market powered by blockchain. So blockchain is really the mechanism that's making this liquid, and so that was sort of the secret ingredient to actually making a real life stock market for real estate.
I think you're already on the right track. Your thinking is next level. Um, I want to get back to, we're going to take it one step back. Where did you grow up? What's your family like? And, what does your family, you went to college, you're going to college for bioengineering, very, you know, suit and tie, straight career path. What does your family or your parents think about now you're diverting and doing tech?
Sure, yeah. So I did start off. So I grew up in Buffalo Grove, Illinois. And I started off as a pre-med my freshman year. That's what I told my parents as well. And so I guess like my dad and mom have always been supportive in terms of like what I want to do. Like even when I said I wanted to be pre-med, they're like, are you sure? Like we're not forcing you to do that. And then once I sort of started talking to my dad about this concept, he really liked it. And he sort of was the one that pushed me to actually take this to the next level and start working on it. And so they've always been supportive in terms of what I want to do. And the startup scene, obviously it's not appealing in the first few years, especially when you don't have funding. It's sort of like you're going to be homeless right after you graduate. And so my whole I guess everything I've been doing in college has been customer discovery, right? Ensuring that this is something that people need, ensuring that it's a viable concept for the years to come. And so that's why I've sort of been customer focused rather than just going directly to a VC and being like, hey, give me money. I want to make sure that to vet this myself at first, just so that it's something that I could do in the long term as well.
You touch upon, now you're talking about the mindset of an entrepreneur, right? Where most people, they hear the word entrepreneur, they're like, that's what I want to do. It equals freedom and it equals more money, etc. But not so easy, right? You got you've got to come up with an idea, you got to implement it, you got to make sure that the market actually wants it, right? And like you said, maybe the first 5 years you're not making anything. Maybe you're losing, right? Because you're investing not only your money but your time and energy into it, your years of life.
Yep.
So that's something that you're taking on at a young age, which I think is a great advantage. So walk us through what is kind of like the day in the life of a founder for you.
For sure, yeah. So honestly, a lot of it is still just being a college student, right? Going to class, studying for exams. And then there's like those sort of breaks where a lot of my other peers, right, they hang out, they go out and things like that. And those are the sort of breaks that as an entrepreneur you can take to work on what you're doing, right? So your friends call you at like 11 and they're like, let's go hang out. It's kind of hard telling them like, hey, no, I'm working on the MVP, or I'm sending out emails to talk to customers, right? And so those are those sort of breaks that you can use as an entrepreneur while still studying. But obviously, like it's kind of weird coming out of a really good customer discovery call, almost like closing a deal for an LOI and then having to go study for fluid dynamics. Like it's just it's kind of a weird combo. But honestly, I would say in my school, in particular, University of Illinois, they have a lot of different programs for entrepreneurs, like from even providing like law expertise to just having these pitch competitions that I've been able to use to sort of get my pitch deck as well as get access to mentors. And so that's been really nice. But yeah, it's just a weird combo being both a student and an entrepreneur.
Awesome, awesome. Okay, so you are a junior now, right? Third
Yep.
year.
Yeah.
So for those who are unfamiliar, what is MyProperty, and what was that light bulb moment that you were like, I have to do this? And what's that journey been? How long has it been, and where are you at now?
Yep. So I'll start with a simple problem solution, right? So, uh, as a person trying to get into real estate, there's a lot of barriers, right? There's three major ways you can do it. One is you get a mortgage, two is you try to find partners, and three is you use the current real estate crowdfunding platforms that exist, right? And so, let's say we go with the third one, right? Right now, the some of the most popular ones include Fundrise, CrowdStreet. The way they do it is they pull all your money into a fund and then they go and invest and develop land. And your money is illiquid for 5 years. If you want to get your money out in that time, you have to pay a penalty. And sometimes you don't know what the returns are going to look like at the end of the 5 years. And so when I browse through like forums, online like discussions, like posts and reviews for Fundrise, I found that there are a lot of complaints saying my money has been illiquid for 5 years, and then after the 5 years, I'm getting negative returns, right? And the reason for that, obviously, in that time was COVID. But it's hard to have clarity on your money. And then if, for example, if I were to use that platform as a college student, it wouldn't make sense for me because I need money like tomorrow, right? Next week, right? Something could happen. And I don't want real estate to be like a 401k investment where I get my money back, when I'm in my 40s, right? It doesn't make sense. And so that was one pain point that I took with me, the barrier to getting into real estate. And then as I progressed, the summer after my pitch competition, where I sort of got this validated and got second place at my university's venture challenge, I worked at a private equity firm. And I noticed that there was a problem for people at the top of real estate investing as well. And that was raising capital and, again, liquidity. right? So accredited investors or real estate funds who are just starting out have this issue of going out and raising capital. They can have really good deal for it. They could have a really good deal, but they're not able to raise capital for it. And so I took these two major problems and I turned it into a marketplace. So you have an accredited investor who has a property that they really want to get funded. So they come to us and submit the deal and pay around 10 to 20% depending on how much cash they have on hand. And so that means they buy around 10 to 20 tokens of a 100 token property. So we tokenize it into, depending on the property, obviously, but let's say we tokenize it into 100 tokens. So 10 to 20 tokens are already bought out by the accredited investor or the real estate fund. And then the rest of the tokens are now bought up by fractional investors that come to our platform. And so fractional investors now, once the property is purchased, so we have a 30-day period where we fundraise for the property. If we're unable to fundraise, the seller can choose to sort of exit, or they can choose to stay on and sign a 30-day contract saying, hey, I won't go out and sell this property in these 30 days while you fundraise for it. And so now that everyone has their tokens after the 30-day period, if I'm a fractional investor, I can sell my token for whatever price I want. So let's say 2 months in, I bought in for $1,000. 2 months into property, valuation goes up, and my token is now worth $1,200. I can sell that token for $1,200, or if I'm trying to get liquidity faster, I can sell it for $1,100. And if I sell it for $1,100, someone gets a really good deal on that token. But it made sense because you needed liquidity at that point. And it's the same thing for the accredited investor. If they are trying to free up some capital for another great deal, they can exit whenever they want. And in terms of who makes these decisions, we just go on a token-based governance level. So everyone who, so the accredited investor, who is the majority shareholder of the deal, they make the major decisions in terms of just like property management and things like that. But the actual property management is going to be done by a different firm, and we cut out 12% of the dividend from everyone's tokens. So it basically and we don't take any fees from fractional investors. Fractional investors pay the basic transaction fees or credit card fees. The way we make our money and our profit is through accredited investors. So accredited investors, if they own, let's say 20 tokens, they give us one token for free, the platform, and the platform makes a dividend off the property every month. Therefore, if the platform is not making any money, that means our investors are not making any money. And that's the guarantee that we give our investors. And that's the way we want to keep our platform profitable for everyone. And in terms of, I guess, the light bulb idea for this, that first part, just the real estate stock market, I noticed that it had been done already and it wasn't working great, right? And part of the reason was because for a marketplace, I feel like there needs to be two different problems you're solving. Everyone was just solving that one problem, creating a real estate stock market. They weren't realizing that the deal flow they were getting, first of all, they had to source the deals, right? Secondly, they were charging fractional investors way too much. And so by solving both problems, we balance out who we're charging, and that's sort of how we plan to succeed in the future as well.
Yeah. So, okay, we've got elements of real estate, elements of tech, investing, a platform of people being able to get in and out, a little bit of trading going on, right? So when I hear you describe it, to me, as maybe kind of an older, more traditional person, it sounds a lot like a REIT, a real estate investment trust, right?
Yep.
That maybe investors are familiar with. You can go on the S&P 500 exchange and buy shares of these large landlords here in America, multifamily, commercial, office space, whatever. And yeah, same kind of the same concept, right? You're buying a share for $10. Tomorrow you could sell it for $10.20, whatever it is.
Exactly. Yeah.
Is that kind of the same here, or is there some major difference that is making tokenization more attractive? Or
So the thing with REITs right now, for a non-accredited investor, you don't have access to the really good ones. So the REITs you have access to are fine, but the really good ones that typically accredited investors put their money in are are the really the ones that I'm trying to make sort of democratized and have everyone have access to really great deals. So that's sort of the differentiator with an REIT. And other than that, I guess tokenization makes it a bit easier for again, like a GP looking for LPs, right? um we want to have that functionality in the future as well, where you're able to find LPs on the platform. It's sort of like a social network in that sense. And so those are sort of the two ways we're differentiated from REITs. Yeah, you can go ahead and put your money in REIT, but it's sort of um less risk, less reward. And then with our platform, hopefully less risk, more reward.
Gotcha. Um, so as an operator, right, as a fund manager myself, in thinking about possibly maybe doing tokenization for our investors and our community and crowd, or what kind of investment or what kind of deals, what kind of properties does tokenization work ideally for? Does it work for everything, or is it better suited for uh, you know, rentals, new development, land development,
One of my advisors actually, Randall, he's the executive vice president for CBRE. So he suggested using ground leases instead. So ground leases is where you buy out the land underneath, let's say, a gas station, and you lease it out to the gas station company, and they sort of deal with all like the building and all the maintenance and everything. All you really have to worry about is keeping that contract for the land. And so ground leases are a great first sort of niche to break into, just because they're really easy to manage, even though they have lower returns than multifamily. It's just in terms of tokenization and starting with a niche, they're way better. And you don't have to worry about property management fees either with ground leases. Going forward, though, some interesting things that I would like to be tokenized are natural resources, right? So like gold mines, for example. It's hard to raise capital for gold mines even as a private equity firm, right? But if you sort of democratize that, bring it to our platform, you can tokenize the gold potentially, right? Or you can use a smart contract and tokenize the 43101, which is the report that says how much gold is in the
yeah.
reserves. And so um, going forward, we definitely want to deal with the non-traditional assets, right? And sort of move away from just residential real estate, because residential real estate, Arrived Homes really has a chokehold on that. That's backed by Jeff Bezos, and so we want to focus on this commercial real estate aspect, and then getting these really off-market deals, which are really hard to raise capital for, onto the platform.
So you kind of mentioned from what you've seen, what typically are the returns that a tokenized investor could see, would see? How much of that is on the operator who's doing the deal, and then how much of that is, you know, just being part of tokenization? Like, are you increasing your returns, or are you decreasing your returns based upon the way that we're investing?
Yeah. So honestly, compared to a traditional mortgage, there are a few drawbacks. So you don't have that debt that leads to sort of larger returns in the short term. However, if you look at it in a long-term perspective, you're getting more cash flow, obviously, because you're not paying that interest, right? However, if you look at it from a traditional investor's point of view who uses mortgages, you are sort of going to be hesitant, and you're going to say, hey, I'm getting lower returns with this. Why should I use this? And my answer to you is liquidity, right? Liquidity is something that's extremely important. I feel like this can have its own category of investments, right? If you're a traditional accredited investor, you have your, obviously, if you're if you're making just at that 200,000 level, and you have a job, right? You have your 401k. Then you have, for example, if you do angel investing, you do some of that on the side. This is its own category of investments, I feel like, because this is liquid. It opens up so many different opportunities. First of all, it's completely safe for you. If everything else, if you've seen the stock market recently, like if everything just
Yeah.
goes down, right? This is something that, okay, with ground leases specifically, right? Ground leases can be recession proof. And so this is something that could potentially be recession proof as well as liquid. So it's this sort of reserve you have. So I don't want to compare us to like straight up mortgages and going out and having that really good debt, because we're going to lose if we compare ourselves like that. We're going for a niche of, one, people who look at Sharia compliant investing, and two, people who are looking for liquidity. Those are our two sort of attractive points. If you look at it just from a returns perspective, returns are going to look lower to you. Just because even with ground leases, they're lower than multifamily, right? But even if we were doing multifamily, it would be lower just because of I guess the mortgages, the debt beating up.
Right.
And other platforms, like example, there was Landa. I don't know if they're still doing it, but they took out mortgages and then they bought the property, right? And so they had the mortgage first, and that wasn't working for them at all. They didn't have enough investors because that sort of defeats the whole purpose, honestly. Like if you're using mortgages, the price is going to be extremely high, and it just doesn't make sense.
Right.
And so cash only at first glance, you're going to be hesitant as a traditional real estate investor, but over time, it makes sense.
You're speaking my language. Halal Sharia compliant investing. When we talk about, obviously, I you probably hear me talk a lot about no debt, no loan, no interest, right? We're trying to do all of our deals all cash. Um, and I see tokenization as simply just a way to make it easier for people to lower the hurdles, the barriers of getting in and then getting out. And you're correct in that in our traditional business, typically, yeah, our investments are not liquid, right? You invest with us in one of our deals, you're in it until we exit, right?
Mm-hmm.
And the way that we kind of address that, right? Because as an investor myself, I agree with you. Um, what's not attractive to me is being locked up for 5 years, 7 years, 10 years, right? Um, we want liquidity in the sense of I want to see my investments turn every 12 months, 12 to 24 months, I think
Yep.
is the maximum for us. So the deals that we're doing, they're smaller, more accessible, more manageable. The smallest projects that we do, like a house flip, we're in and out in about 6 to 7 months, right?
Mm-hmm.
On a commercial land development, about 12 months. If
Yep.
we're taking that developed land and we're building new product and we're selling it or leasing it up and selling it, it's about 24 months, right?
Mm-hmm.
So, for us, yes, it was a big thing for me that in my own way, I wanted to create a shorter time frame for investors to get in and out, experience the success. And of course, you'll say it, I'll say it. 2 years is kind of a long time. You never know. Life changes, right?
Yep.
Circumstances change, uh, especially now, families, they're growing, we've got to move, jobs are changing, the market, the economy. So it's always the money that we have available to invest today maybe money that we need tomorrow, right? Or 6 months from now. So yeah, a big thing for us is not to be able to um, lock people up for a long time. So I like what you're saying about the liquidity.
Yep.
Um, now tell me, you mentioned increased liquidity in tokenization. Does that also mean increased safety? Like like is it safer to invest in yours in these ground leases or these tokenized things? Like of course, at the end of the day, the real estate performs on its own, right?
Yep.
Um, we hope that the value of the land doesn't go down.
Mm-hmm.
We depend on the operators who are leasing those commercial properties to pay rent on time, keep their businesses up and running and operating and optimized. Um, what does that do for the tokenized investors? Are they safe? Are they secure? You know, what are their
Yeah.
risks?
The way we ensure this is before we even tokenize the platform, or sorry, the property. We want to do due diligence in the same way that private equity firms or real estate funds do due diligence. So, credit investor submits the deal. We will, most likely have a really thorough approach to it with a really thorough advisory board. who sort of looks at the deal, scrutinizes it as much as possible. So it's not like you're a fund, right? And you have a deal and you're like, okay, I'll just go upload it to the platform. It's more like, okay, if it's a really good deal, I'll upload it and these guys will check it. And if it's a really great deal, then we'll raise capital for it. And so that's one way we protect our investors. Another way is that we're going in on this together with them. So if you can recall, like the way we make money is we charge the accredited investor one share or one token of the property. And so once we get that token, that's our bread and butter. That's how we're making money. We're essentially getting a dividend off that token every single month. Another way we're sort of protecting them is we are again, like we're doing our due diligence. We're ensuring that the deals that we get are investable, and we want to have our own valuation algorithms as well. So those algorithms are sort of going to tell us like in terms of just the land, like what's this area looking like, right? Having potentially AI agents go out and get that information. Are the schools good? Are what's going on with the news lately in this area? And so just that whole due diligence process, as well as the fact that we're going in on this as a partner with all our investors, is what is going to make us safe and succeed as well.
Bringing this back full circle, obviously, our market or our demographic, they're looking for the halal Sharia compliant way to invest. Is tokenization, and this is a big question, right? Is crypto, is blockchain, is it halal? Is it Sharia compliant? Who's really moving this money, or who's holding it, right? Like,
Mhm.
how do we trust and validate that the tokens are where the tokens are? Like, speak a little
Yep.
bit about what you guys are doing and how it fits into and how Sharia compliant investors can take comfort in knowing what we're doing.
So honestly, since I didn't have that information when I was starting out, I met with a Sharia compliance consulting firm, and they sort of gave me the rundown. And honestly, this is a very common practice in different countries. U.S. is just really slow to adopt for some reason, but in other countries, they're miles ahead on us with this stuff. And so there's already like sort of legislation in terms of, or there's already, I guess, like photos in terms of like what is halal, what's not haram with crypto. The main a thing for us would be what's our backing, right? So if we use Algorand, there's sort of like a difference of opinion, right? Is that Sharia compliant or is that not, because of the uncertainty involved? However, there is a new tokenization infrastructure coming out from Canada called Mabruk. So they're Sharia compliant, and potentially we would use, for example, a platform like that as our backing instead of Algorand. There's many others that came out from the Middle East as well. And so it's so some of the tokenization is halal, some of it is haram. But again, many differences of opinions. It's a new field. It's sort of something that people differ on. But there are the ones that are Sharia compliant are in fact Sharia compliant. Like Mabruk, they will be Sharia compliant, and so
Got it.
we would only go with the one that the consulting firm tells us to go with, essentially, just for peace of mind of both investors and us as well.
You're doing pitches for your college programs. You're getting, hopefully, inshallah, some grant money. It's been a couple of years now with you and your partners. Just from a entrepreneurial founder perspective, since you've launched, uh, what have been some of the most exciting or validating kind of milestones that you guys have hit and achieved?
Yep. So when I pitched to the private equity firm I worked for, it's also run by a Muslim person. And so when I pitched to them, the sort of like the validation that I had for the idea in that pitch was amazing because they really liked the concept. They wanted to do something similar, just in general, but specifically with real estate, they really liked it. And so pitching to the board and everything, that was an amazing experience as well as validating. And then just the conversations I've had with like people like you, right? Like real estate
Yeah.
fund managers. So 80% of them are like, this is an amazing idea. 20% of them still aren't convinced that this can happen just because one, they don't know the space too well, or two, it's just not how we do real estate in the US, right? And so it's been nice to get both perspectives. I really enjoy the 20% who say, like what's going on, like can we actually do this? or what are the actual drawbacks to this, because they sort of, I use those things to sort of frame what I want to do in the future, like using that feedback versus just like having someone say like, oh, this is an amazing idea, that you should definitely do this, right? Like there's more value in the feedback you're getting that tells you like, hey, maybe what you're doing is not entirely correct. And so those have been helpful. And then talking with lawyers as well. So initially I didn't even know like the legalities behind this. I just sort of wanted to do a real estate stock market. And then I looked into it, and I had those conversations with lawyers, and they honestly like I asked them like, are you sure this is like, you can actually do this? Like, I couldn't believe my eyes, and apparently you can do this. And so those conversations have also been validating. So just, I guess, moving forward, what would be even more validating is actually getting those LOIs from fund managers, and then having, again, those same conversations with more and more customers as we go forward.
Right. Yeah. So I think especially for us here at KPEG, when we talk about Sharia compliant investing in real estate the way that we're doing it, you know, it's not a novel new idea, right? But it's novel and new that nobody else is doing it, right? Very, very few people, especially here in the United States. Just like you mentioned, when we go east into the world in other Muslim countries, like this is just regular run of the mill, right? But
Yep.
for here in America, Islamic finance really has, we're under 20 years old. Like,
Mm-hmm.
even after the year 2000, Islamic finance has come into the USA, it's come to the West. So we're still getting our mindset around, not having to succumb to the Western ways of doing business and doing lending and doing financing and all that. I think we've obviously come a long way, but we have so much longer to go, and we're getting there. And I hope that our company here at KPEG can help push that along. And then behind us, you've got companies or operators like yourself who are pushing the tech part even further. So on our end, we don't. I would go as far as say we don't have a lot of competitors who are doing what we're doing. Who,
Yep.
if any, is out there here in the USA doing what you're doing?
So as far as I know, no one's doing Sharia compliant, or at least like approved Sharia compliant. Um, our main competitors, I would say, Arrived Homes, number one. That's Jeff Bezos backed. So obviously, extremely hard. So they have their niche of residential real estate, and so they do that. And I guess the issue with them is they don't have the accredited investor aspect of it, and so that's not how they really get their deal flow. And obviously the fees that they charge fractional investors. And then Lofty AI, they're YC backed, Y Combinator, and so they haven't they're semi successful, I would say, but they still have their issues, and that sort of stems from first of all the fees they charge fractional investors, and secondly they weren't able to onboard enough investors on their platform to actually make it go smoothly, and so they had to actually have an internal market maker, and so that's something that we could potentially learn from as well. Potentially have a
Yeah.
market maker in our platform, and then there's Realty. So Realty is based in Europe, but they were trying to enter the U.S. market. I don't know if they were successful yet, but same thing, right? Tokenization, but the same problems are you know recurring in all these different startups, and there's so many other ones that have failed. Starting from 2012 when the Jobs Act came out, that's what sort of led to all these crowdfunding websites and whatnot. So the first like real estate, technically, like what I'm trying to do, that was established in 2012, but all the ones that have been established have basically failed up till now. The only ones left are sort of like the newer ones that were established maybe like 3 years ago. So
Why
the
why do why
core,
do you think they failed and flamed out? Like,
yeah, no, that's I guess that's what I've been trying to figure out. And I guess the core problems stem from one, not having enough investors on the platform, right? And the way I want to solve that is open this up to a global reach, right? So getting investors from different countries onboarded onto the platform, so we have enough people to sort of make the market work. Number two is I guess the fees that they've been charging, right? The returns just weren't there. And part of the reason was just the abhorrent fees that they were charging fractional investors, as well as hidden fees.
Yeah.
And so, once you got your profit, it wasn't a profit anymore. And then the third reason is they don't do a secondary market, right? So the ones that do a secondary market, they have those hidden fees. The ones that don't do a secondary market, it's illiquid, like Fundrise and CrowdStreet. CrowdStreet honestly is one of the most successful ones, and but they continue doing I guess charging fees, transaction fees, and that's where we want to beat out our competitors. We want to our revenue model is going to be our main sort of way we're gonna beat out our competitors, and obviously I'm constantly learning from these previous businesses that have failed just to figure out like what we can do to avoid that.
Yeah. So it is without a doubt, Aeon, you are building a game-changing platform while still being in school. So congrats to you and kudos to you for all of the people, young and old, out there listening. What advice would you give and leave to other young entrepreneurs who, like you, are in school? Maybe they're thinking, oh, we're too young to do something, or we don't have enough resources to do what we want to do. Clearly, someone like yourself can do it. Um, what advice would you give to young entrepreneurs, young guys who want to come in? They have thoughts of disrupting traditional industries. What would you tell them?
Tell them go for it, right? If you have a sort of problem that you want to solve, regardless of what that problem is, if that problem is like getting a rocket to go to Jupiter, right? It doesn't matter what the problem is, as long as it's a problem, right? You can find a solution to that, right?
Yeah.
So if there's a major problem that you are passionate about, or even that like you have faced, try solving it, right? Just go for it. Whether it be going to university pitch competitions with just an idea, or just talking to people. I feel like talking to people is probably like 75% of the reason why I got to the solution that I got to today, right? It's just like what are the actual pain points that the person is getting in their day to day, right? Investors, like what are the pain points they're getting every day? What are the true problems, right, behind the surface level problems? You can ask Chat. I tried doing this with Chat GPT, right? Tell me the problems. Most of them are surface
Yeah.
level, right? You have to have those actual genuine conversations to figure out what the problem is, and you have to learn to read between the lines as well. Because the person who has a problem doesn't always tell you the actual problem. He tells you the symptoms of the problems, right? So you have to read behind the symptoms and figure out what the actual problem is. What is the root cause of all of this? And then create a solution that caters to that. And if I honestly, like before this, what I used to do, even with this idea in the beginning, what I did was I came up with the solution first. I'm like, I want a real estate stock market, right? That doesn't necessarily always work because you're not you aren't addressing the true problem, right? You're not addressing the root cause behind what's going on. So honestly, customer discovery is the most important part of this. And if you're in college, you honestly have an advantage because you can just hit up people like I hit you up, right? I was like, hey,
Yeah.
I'm a college student. I go to University of Illinois, and I'm working on this, right? That's sort of a really great one-liner, and I feel like that gets a really great response rate as well versus just being like, I'm a startup founder, right? So use that college student thing, or if you're in high school, even that's even better. Use high school student to just learn, right? Learn about your industry and your niche, and that's sort of how you can move forward.
No, 100%. I absolutely agree. I love when guys like you reach out to me. I jump at the opportunity to hop on the call, mainly because I just want to learn, right? I want to learn. I want to see what you guys are seeing, right? You're the next generation. You're coming up. You've got fresh ideas. Obviously, you're learning about new technology as it's coming up. Blockchain, Web3, AI, all this stuff. So for me, I'll speak for myself. I always want to be at the forefront, right? And if it's not with me, then I want to learn from somebody like yourself how I can do it and not get. I'm very cognizant of not being stubborn, of doing things my way, right? There's always uh, things that you can do better, bigger, more evolved, more efficient, more optimized, and my opinion is you figure all that out by meeting, talking, picking people's brain and all that stuff. So, and then the other thing that you mentioned was absolutely correct. The whole uh, birth of KPEG or King's Private Equity Group and our Halal Sharia compliant fund of investing was through customer discovery, right?
Yep.
Um, we had investors coming into us who they were voicing their desire or their need. Hey, we would love to uh, can we do this deal without any debt or without any loan, without having to pay any interest? And, I sat there and I was like, no, listen, this is the way of the world. We have
Yep.
to, right? We have to go to the bank and get the loan.
Yeah.
And sure enough, after maybe hearing it from like the fifth person, I was like, hold on, why can't we do this? Right? Like it is such a simple back to basic principle, right? Like common sense. If we are entering the crowdfunding space, and if our whole idea is to bring the people together to do a project, not just by ourselves, but as a community, as a group, why can't we be our own bank? Right?
Hmm.
Why are we using other lenders? Why are we paying fees? Why are we paying interest and origination points and all that stuff when if we're here together, we're crowdfunded, we're doing a deal all cash, we are all equal partners in this deal, we all profit together. That for me was the light bulb moment. Like,
Hmm.
okay, this is what we can do. And I had to get out of my own stubbornness to think that, oh, this is going to be a really hard sell, right? Actually, in the last 6 months, it's been the easiest thing ever, right?
Yeah.
When I talk about it, when I bring the topic up, all I get is head nods. Like, yes, it makes sense. We get
Hmm.
it. Let's do it, right? So it's been a real blessing to me to be able to actually have more conversations, not only with LPs and investors, but also with operators like yourself who are starting other businesses, and you're also having the mindset of let's do it in a Sharia compliant way. It's just more validation even for me and what I'm
Yep.
doing that, hey, we're doing the right thing, we're going the right path. Um, this is where we see just overall maybe business going in the next 5, 10, 15 years. So we're going to keep doing it. And I, again, push you to keep doing what you're doing. I'm excited
Inshallah. Yeah.
to see where you take this. Um, are you still currently now in beta phase or
Yeah, we're still building. We should be finished soon.
okay.
Um and we want to start with like one firm and onboard their sort of assets on our platform. And then we're going to do the outreach then. We're going to talk to first of all accredited investors to maybe get more deal flow and then talk to fractional investors, right? And then after beta, we want to do like this really great marketing campaign, something that
Yeah.
speaks to the message and I guess like the vision behind our platform. But that's definitely the goal.
All right. Awesome. Thank you, Aeon, so much. I think the people are really going to enjoy this, and I'm sure you're going to get a lot of people who are like now waiting in line for you to come out and launch.
Inshallah.
Inshallah, yes. And I personally see a lot of operators like myself who would see themselves aligning with you and making tokenization a more prevalent thing. So again, thank you for your time so much. Again, guys, if you want to learn more about MyProperty or what Aon is doing, uh, drop a comment below, hit us up. We will put you in touch with him. And any questions, any concerns, any comments, any thoughts, anything tokenization, crypto, blockchain, you name it, we'll get the answers for you. So thank you guys again. Thanks for tuning in. Hit the subscribe and like button, and we'll see you next time.